Hi guys, it's Chris here. I just want to do a brief tutorial on the Fibonacci retracement tool. Okay, so basically, if we're looking at a chart like this, let's just get into a bit of simple analysis. Obviously, the first thing that we need to do when we're trading is identify a direction to trade in. So you can see we've had some upward movement here, some higher highs and higher lows, and eventually that upward movement, we've stopped getting higher highs, and then all of a sudden we had a lower high. So that's, in an upward trend, we expect to get a higher high. And then you can see the price came down, it broke through that trend line up, and it definitely broke through as well that's the previous low and even the next one down. So you can say we've now got a high, a low, a lower high, and a lower low. So at that point, we've identified the trend. So we're obviously in a downward trend now. And when when we're trading, what we do is we would identify a new wave. So an A, B wave would be here. So you had A, B, C, A, B. And then what we want to try and find is, where is the C point going to be? So we'll just label that up. We've got an A, that point, we've got a B down here, and we want to establish our C point so that we can perhaps look to place a trade. So we're going to grab our Fibonacci tool. We always draw the Fibonacci from point A right down to point B. So just drag it down, and you'll find that if we let go, it will just should snap to the candlestick there. Okay, so now we've got a Fibonacci in place. Make sure that it is on the top and the bottom. And your Fibonacci gives you a few levels. It gives you, or the main ones that we're going to look at, or the main ones that we would trade from, really are the 38.2, the 50, and the 61.8. So these Fibonacci levels, they act as a support and resistance. In other words, they act as a technical barrier. So, in the downward trend, for example, then, as the market comes up, it's going to struggle to break through these areas. And probably the strongest areas are going to be your 50 and your 61.8. So we use it as a tool where we can then see, okay, the market is likely to stall or turn around at this place. So if we have a look what happened here, we went right up to our 61.8 level, a little bit above in fact, but it bounced nicely on this trend line coming up. Could have probably done a trend line as well, like so. So we've got a couple of trend lines. It's hitting off. Well, it's probably better on the first one, but nonetheless, yeah. So, yeah, so we've got, so it's basically hitting off our trend line, which is around about this 61.8. So that's how we use the Fibonacci. The other thing that we would also check for is what we call Fibonacci Convergence. So yes, by default, I'm going to obviously put my Fibonacci from A to B. I'm going to see if there are any other previous swings that I can perhaps try out. So above here is a previous high. And just to test out, we'll do this obviously before the market gets up there. But as I'm drawing my Fib, what would happen if I drew a Fibonacci from here down to the bottom? Okay, so what sticks out for me is when I do that, I've drawn from this point. Instead of this point, I've gone from the previous high, and I've drawn right down to the end of B here. There's two levels which are lining up. Okay, so it's actually from the A to B, a 61.8 retracement level, but from the previous high to B, it's actually lined up exactly with a 50 Fibonacci retracement. So when you're seeing something like that, you have to say to yourself, okay, that is a doubly strong level because it's lined up exactly with both of those levels, both the 50 on one swing and the 61.8 on the other. what happened at that point? Then around about that point, the market then started to come down. Okay, so that's how you use your Fibonacci convergence. Sometimes it can be on a weekly or a higher time frame where you've got a massive swing from another leg, and you've almost got something down here perhaps, or something from a different time frame, and you all of a sudden you see, okay, wow, my 38.2 for my weekly or my daily or whatever the higher time frame is lining up exactly with one of my levels on that I'm looking at for my ABC. So again, you can count that as Fibonacci convergence. Now, the other thing that we would look for, or we will use our Fibonacci tool for, is to help us predict how far the market is likely to go. Okay, so if I just have a look at these Fibonacci extension levels here. Okay, so at the point that we enter the trade, we've got no idea where the price will go, but we need to obviously put a take profit in and have some kind of targets. So one of the things that we will consider is our Fibonacci extensions. So if I just put lines on these levels, I'll consider the Fibonacci extensions. And what I want to do is I want to go back in time to see, are there any other kind of support and resistance areas that back up or line up nicely with my Fibonacci extension levels? So if so the first thing I'm seeing, okay, number one, I've got, if the market does go past B, it's going to go to my 23.6. Okay, so does my 23.6 line up with anything? Yes, it does. It lines up very, very nicely with that level there. But it's giving us an indication that that could be where the market might go to. Now remember, no one in the whole planet knows where the market will go. So the best that we can do is have an educated guess. So based on the Fibonacci extension level and that previous support and resistance, you could have that as your target. That would be a solid target to trade down from. The other thing is that when I'm zooming back here, I'm also seeing this prominent level. Okay, so that to me is quite a coincidence or coincidence that exactly on that line there you've got that support and resistance. So that could also be a possible target. So let's have a look and see what exactly happened. Okay, so it broke through that first point. But can you see how we had a little support there, which is on a Fibonacci extension level. Then it broke that, it got down to the 50, and it pretty much hit 61.8. Okay, so pretty much hit or came very, very close to. And let's just have a look back here and just see our previous support and resistance. Okay, so there's no coincidence that those two things line up, and that's exactly where the market got to. So yeah, it's really just a tool. When you're doing when you're positioning your lines, you want to give yourself as big a chance as possible of being successful. So if you think that the market is going to come down to your 61.8, just put your take profit just slightly above, okay, just to make sure that it actually hits there. The other thing is that if you go back in time and you see, okay, there's a support and resistance at that level, and you've got your Fibonacci level. So maybe your Fibonacci level was, for example, down here, but you see a little support and resistance slightly above, and it obviously makes sense to put your take profit above the 2, because you don't want it to hit your support and resistance line and bounce up if you've got your take profit on your Fibonacci extension. I hope that kind of makes sense. So guys, I hope it's been useful for you. Use these things, use these tools, piece them all together. I always say to students, learn 1% per week. You just get 1% more knowledge this week than you have last week, then you're on the right track. You will get there. If you need any help with anything, or if you have any questions, then obviously give me a shout, drop me an email, give me a call, send me a WhatsApp message, or pop onto the chat room, and yeah, look, we're here to help you. We want you to be successful. So anything that we can do to help, let us know. If there's any topics you want me to cover on the videos or on the webinars or anything like that, then just give me a shout and I can put it on my list. Thanks a lot, guys. Bye.